Hello there and welcome to Homeschooling Adventures. My name is P. Jerauni, and in this video we are going to be looking at the subject of mathematical literacy, and then we are also going to be specifically looking at the topic which is finance. And like you can see there that I have indicated that it's finance revision. In other words, we are going to be going through the concepts of finance that we have looked at in the previous term, and as we prepare for our exams. Okay, like you do now know that the topic of finance is going to be assessed in your paper 1, so it means I believe that you have already covered some of these areas, or even if you haven't covered the areas, no problem. We are still going to be looking at it, and then when you cover it from your different schools, then it's not going to be a new concept to you. Okay, right, so let's just probably start by looking at what we already know, and then we try to remind ourselves on some of the things that we already know. Okay, now what we already know is in the area of finance, there are generally some few things that learners must be able to know as they prepare for their exams. One of the areas that they need to know is what is called financial documents. And then the question that comes to mind is, what are financial documents? Now when we talk about financial documents, we are saying these are a set of standardized documents that are used to communicate financial information. In other words, that set of standardized documents can come in the form of a pay slip. We say a pay slip is standardized because it does have specific information that should be there for it to be a pay slip. In other words, things like the gross income, it must be disclosed on the pay slip. The deductions, they must be disclosed in the pay slip. The net salary must be disclosed in the pay slip, as well as the name of employee, or sometimes in certain organizations they do use employee numbers. So the employee numbers, or even the account that the money was transferred to, and those kind of things, they should all be disclosed. Even if the employee is liable to any tax that needs to be paid, then that amount that has been deducted as tax also needs to be disclosed. So we are saying it's standardized. And then we also have other things like even the bank statements is also another standardized document. Why do we say a bank statement is standardized? It is because you would find that in a bank statement we always have the account number, the bank name, the name of the account holder. We also have maybe the ID number of the account holder, and then we also have all that other information, so the amount of money that has gone in, the amount of money that has gone out, as well as the closing and opening balances. So those you'd find if you go from one bank to the other bank to the other bank, that kind of information is going to be appearing on your statement. So that's why we are saying it's a standardized document. Okay, right. And then you would now find that that's what a financial document is. So in this particular video, we are going to be looking at some of these standardized documents, and in particular we are going to be looking at the bank statement, and we are going to be looking at the pay slips, among other things that we are going to be dealing with in this particular video. Okay, now we also need to probably we would now want to remind ourselves on some of the key terms. Okay, one of the key terms that I want to give you is the word tax. Now someone might be wondering what tax is. Now when we say tax is a compulsory payment that is imposed on a citizen's earnings, okay, or purchases to fund the activities of the government. Now when we talk about tax, we are saying this is an amount of money that is taken, or that is imposed on a citizen's earnings. Okay, like if you go to work and you earn a salary, then from that salary a certain portion is going to be deducted as tax. Okay, if you go and you buy certain items from the shop, then from those items that you have bought from the shop, there are certain amounts, there's a certain percentage. In our current context, it's 15%. that is going to be charged on those items that you have bought, and all that it's a what is called tax. And why is the government doing that? It's levying those taxes on our earnings as well as our purchases to try and finance the government's activities. Okay, so that's what a tax is. So we are saying a tax is a compulsory levy that is imposed on a citizen's earnings or purchases to fund the activities of the government. Okay, then you would also find that when we look at these taxes, they are generally divided into two types. We have number one type of a tax that is called direct tax. Okay, now when we talk about direct tax, we are saying these are taxes that are levied directly on my income. In other words, they are charged direct from my income to the government. Okay, so we have direct taxes, and an example of such a direct tax is we have things like pay as you earn, which is normally called the payee. So payee, it means pay as you earn. Okay, so this one is an example of a direct tax. Okay, and now we also need to also understand that we also have the second type of tax that we have, which is called the indirect tax. And these indirect taxes are taxes that are charged normally when we buy products. Okay, they are charged to the purchaser by the government when they buy a specific product. For example, if you go to the shops and you buy maybe a loaf of bread, you find that it could be charged VAT, or maybe you go to you buy certain items, you are going to be charged some amount as value added tax, and that value added tax is an example of an indirect tax. So we are saying VAT, which is popularly known as the VAT. And you would also need to understand that currently in South Africa, our VAT is charged at 15%. You need to also remember that currently in South Africa, our VAT is charged at 15%. Okay, it's very, very important for us to understand that. Okay, right. And then you do now also need to understand that we have another term. Now, when we have charged especially direct taxes, when we charge these direct taxes, okay, these ones here, it is in particular we are looking at the payee. What it does is it affects the amount of money that you are going to have, or that you are going to go with home. So we are going to look at those effects shortly, so you just need to hold on a bit. Now, the first thing that you would probably also need to understand is, for us to be able to implement the payee, it would mean that this is tax that is going to be charged on specific amounts of monies or incomes, probably, or pay specific income level. And in this case, that income level that it deserves to be charged, or that is supposed to be charged of taxes, is what is called taxable income. Now, when we talk about taxable income, we are saying this is the income that is taxed. Okay, this is the income that is taxed. Now, taxable income. Okay, taxable income. Okay, this is the income that is supposed to be charged of tax. In other words, you do now understand that when we talk about our taxable income, we are talking about the amount of money that is going to be charged of tax. Okay, and normally this amount of money is after taking out the non-taxable deductions. In other words, we do have certain deductions that are charged on an employee's salary that are not supposed supposed to be taxed. And these deductions, they generally come in the form of we have the pension fund, we have the retirement annuities, we have the UIF, we have the donations. So those things, they are not supposed to be taxed. So what do we do now? Our taxable income, I'm just going to give you the formula for calculating our taxable income. Our taxable income in this case is total income, okay, minus our non taxable deductions. Now, when we talk about our taxable income, remember the formula, it's total income minus the non-taxable deduction. So it means from my total income, I'm going to have what? I'm going to be having the non-taxable, like pension or UIF or retirement annuity or donations. Those things, they've got to be subtracted first before I can calculate how much I'm supposed to pay as my tax, okay, before I can get my taxable income. So how do I get my total income? Now, your total income, learners, you now need to understand that total income is going to be basic salary. Like normally, if you are at work, they will tell you that your basic salary is this amount of money. So when we talk about our total income, it's basic salary plus other earnings, okay, plus other earnings. We are talking of things like probably commission, okay, plus other okay, other earnings. We are talking of things like commission. Sometimes you find that you work and then they say, okay, we are going to be giving you a basic salary of this amount of money, and then we are going to be giving you a commission of this amount of money. So what it means now is all that, it forms a part of your total income. It forms part of your total earnings. So that is going to be added together. When it's added together, we get our total income. Then from that total income, you subtract the non-taxable deductions, things like pension, things like UIF, things like retirement annuities. And then when you have done that, now the amount of money that you are left with is what is called the taxable income. Now, with that taxable income, now you now go to what is now known as the tax table. Okay, but before you go to the tax table, I will just also need to just remind you of one more thing. Okay, one more thing that I need to remind you on is what is called a rebate. Now, when we talk about a rebate, learners, a rebate is a tax relief or a reprieve that is given to all taxpayers. Okay, it's a rebate is a reprieve or a tax relief that is given to all taxpayers. Okay, and normally our rebates, they are divided into three broad groups. We have the first one, which is called the primary rebate, and we have the secondary rebate, and we have the tertiary rebate. Okay, now these three rebates, we said they are generally primary. We have primary rebate. Okay, and it's very important for learners to understand this, because in the exam you need to use this should the examiner decide to examine you in this area. Okay, so we have primary there, then the secondary rebate, and we're just going to say secondary secondary rebate, and then we have the tertiary rebate, which is the, I'm just going to say tertiary. Okay, right. Now, when we talk about the primary rebate, normally our primary rebate, it looks at anything that is anyone who is below 65 years. So anyone who is below 65 years is considered to be in the primary rebate, okay? And then the secondary, we are saying it's normally above 65 but less than 75, okay? So we are saying between 65 years up to 75 years. Okay, this is our secondary rebate. Okay, it's normally between 65 years up to 75 years. And then we also have this one that is called the tertiary. Now with our tertiary rebate, it's those ones that are above 75. Okay, tertiary rebate is those ones that are more than 75 years. Okay, if someone is probably more than 75 years, then it means they qualify for our tertiary rebates. Okay, so these are the three rebates that we have those that are below 65, they qualify for the primary rebate. In other words, this is the tax relief that they qualify for. They qualify for the primary tax relief. Okay, and then if it is someone who is probably 66 years, then they qualify for the secondary tax relief. And then if someone is 75 years and above, then they qualify for the tertiary tax relief. But this is what you now need to understand. This rebate table, it's cumulative. In other words, for example, let's say here maybe primary rebate, maybe they qualify for a tax relief of 2,000. Okay, I'm just going to use 2,000 as an example so that I can clarify what I'm saying here. Okay, 2,000, then maybe let's say the one who is in secondary qualifies for a tax relief of 1,500. Okay, 1,500, and probably the one who is in tertiary maybe qualifies for a tax relief of 500. Okay, now this table, these rebates, they are cumulative. This is cumulative. Why? Because we are saying, take for example, someone is 66 years. If someone is 66 years and in the exam you are told to calculate the rebate, then it would mean that you are going to say primary plus secondary, because someone who is 66 qualifies for the secondary rebate, right? So it means someone who is 66 is in this is between 65 and 75, so qualifies for the secondary rebate. So how do we calculate their rebate? Their rebate, for us to calculate it, we are going to say the primary, because what is more than the primary stage, is we are going to say primary, which is 2,000 rands, plus the secondary where he is, okay, which is 1,500. So it means this rebate that they qualify for is going to be for someone who is 66 years is going to qualify for a rebate of 3,500. Okay, that becomes the rebate that they qualify for. Okay, why are we saying they qualify for 3,500? It is because of 2,000, which was the primary, and 1,500, which is in the secondary. So that's where the 2,000 is coming from. So this is supposed to be added as it accumulates. And then even if the person is in the tertiary, then it means it's going to be, if the person was in the tertiary, then it means it's going to be primary of of 2,000 plus secondary of 1,500 plus tertiary of 500, which means for someone who is 76 years, for example, that person is going to qualify or is going to get a tax relief to the tune of 4,000 according to this, because it means it's 2,000 plus 1,500 plus 500 rands. Then it means this person qualifies for 4,000 as their rebate, okay, as their tax relief. You understand? Okay, now let's just move on. I hope you understood that part. Now you also need now to understand that we say the payee. When I say the payee, I think I just want to explain what this payee is. When we talk about payee, we are saying it's a pay as you earn. Payee is an abbreviation that means pay as you earn. Okay, which means the more you are going to be earning, you are going to be paying more in terms of taxes. In that kind of system in South Africa, we call it the progressive income tax system. Okay, right. And then we also need to understand that there's, I mentioned as non-taxable deductions, I also mentioned the UIF. Okay, let me just explain something about UIF. UIF, it is an acronym that means Unemployment Insurance Fund. It's Unemployment Insurance Fund. In other words, this is a contribution that is made by everyone who is earning some income. Okay, and this particular contribution that is made, it's normally 1% from the employee and 1% from the employer. So when the amount of money goes to the revenue collectors, okay, in this case SARS, when it goes there as 2%. Okay, UIF it's 2%, but the 2% it's charged as 1% is for the employee and the 1% is going to be paid by the employer. Then it goes to the revenue collectors as a 2% of your basic salary. Okay, so this is what you need to understand. Sometimes in exams, the examiner can ask you to calculate the UIF contribution by the employee. Okay, if it is the UIF contribution by the employee, or it's UIF that is supposed to appear on the pay slip, it means it's done from the angle of the employee, because the pay slip is a salary advice. It's advising from the angle of the employee. You understand? So what it would now do is, you are saying on the pay slip, when calculating your UIF, you are using 1% because you are preparing it from the angle of the employee, okay, of the worker. Okay, so you calculate 1%, but sometimes you can be asked in the exam to calculate the UIF contribution that has been paid to the revenue collectors. If that amount of money, the total UIF contribution, normally they use the word total UIF contribution. Now when they say total UIF contribution, what they are saying is total, it means it's going to be 1% for the employee plus 1% for the employer. That's where we are getting the word total from. So you need to understand this. It's very, very important that you understand that UIF, yes, it's 1% from the employee, okay, but the employer also pays the same amount, 1% also. Okay, so you contribute 1%, the employer also brings in 1%, and then when it goes to the revenue collectors, it goes in as a 2%. Okay, I hope I've clarified that. Okay, so you need now to understand the context of the question, whether it's asking you UIF, if it is asked for the pay slip, then it means we are using 1%. If UIF is asked from the and they say total UIF contribution, then it means in that case we are using 2%, because it's 1% employer, 1% employee. And I think I have really clarified that. Okay, now That's what happens with our unemployment insurance fund. So let's just it's probably time that we need to go and do a question. So I'm just going to share with you this question right now, and I'm going to ask you to pause the video, and then when you have paused the video, you will go through the question on your own. When you are done with the question, probably about I will give you about a few minutes. When you are done with the question, you just place the play button, and then we'll revise the question together. Okay, your 10 minutes starts now. Okay, welcome back. Now, I want to believe that you managed to answer the question. It is a fairly easy question and an interesting one for that matter. Okay, so this is the good thing about our subject. It's an interesting subject because these are things that we meet on a daily basis. And with us here, I'm sharing with you, this one is a pay slip, and or someone yes, read here where it's written a salary advice. So this one is a pay slip. Okay, now who is the person who is the recipient of this pay slip? We are told that it's a Vusi who received a pay slip here, and then we are also told that Vusi is also going to receive 115 commission over and above his basic salary. Okay, and this 115 is charged for each visitor. Okay, he accompanies at the park. So this is what is happening with the Vutsitanda. Vutsitanda is working at a national park, which is a Kruger National Park. Okay, and he is probably a tour guide there. According to this question, he is a tour guide. So what he's doing is he's going to be earning two incomes. He has what is called the basic salary, and then over and above the basic salary, Vutsitanda is going to be getting 115 rands commission per each visitor that is going to assist as a tour guide. Okay, right, now this is what we are saying now. So it would now mean that you can now see, like what I was saying, that normally all pay slips, they do have the name of the employee. In this case, we can see the name of the worker there, that's Vutsitanda, and then we have the banking details, that's the account where this amount of money was deposited, and then we also have the ID number for Vutsitanda, and then we also have I think the date he's going to get paid. The money will go in on the 31st of January 2023. Okay, and then we are also told that Vutsitanda is going to get a basic salary here, an amount of 7,500, and then his commission, we are told that it's A. It means we might need to end up calculating the commission there. And then we also have his gross income. Now the starting point is, you now need to understand that this gross income is going to be a total. In other words, we are going to add this plus this. We are going to add the basic salary plus the commission. That's what is going to give us our gross income. When you say gross, we are saying it's the total income. Gross, it means it's the total income before deductions, before any deductions are taken out. So this is the amount of income that is going to get before he pays taxes, before he pays his medical aid, before paying pension fund, before paying UIF. This is the amount of money that he would have received. Okay, right. And then we also have things like pension, we can see there, which is our non-taxable deduction, and then we also have total deductions. Now you need to understand that whenever we say, we use the word total, what it means is we are adding. When you say total deductions, it means it's the total, or it's the sum of all deductions. We would have added all the deductions. Now you need to understand this language, dear learners. When the examiner says total, it means it's after adding everything up, after summing up everything. Okay, that's what the word total means. When we say difference, we are saying you subtract. So difference, you subtract. Total, you are adding up. Okay, so whenever we say total here, it means it is after adding up adding up what? Adding up all deductions. That's why it's called total deduction. So it's after adding up all deductions. Okay, right. And then we have this that is called net salary that I might just need to explain here. Now, when we talk about net salary, learners, you need to understand that this is salary after the deductions have been taken off. In other words, this is the amount that we commonly know as take home. Okay, you have heard about people saying my take home is reduced, my take home is reduced. Now, what are they talking about? It means the amount of money that they are going to take home, okay, from the employer, okay, is going to go down. Okay, so how do we get that take home? That take home, which is our net salary, it's the gross income less the total deductions. That's how we get the take home. And I think we are going to be looking at this particular one so that we understand how the take home is calculated. Okay, right. Okay, now let's just go through the questions then. The question, fortunately, the question starts by saying define net salary in the given context. So when you say in the given context, it means the given context here is VUS. We are looking at in the context of VUS standard. Okay, so it means in your answer you should include the name of the person because that's the context that is given. Okay, right. So when we say net salary, you need to understand that net salary is the salary that VUS takes home after deductions. Net salary is the salary that VUS takes home after deductions. Okay, that's the context. Okay, so you need to remember to include the context there, and our context in this case is VUS. Okay, the general definition of net salary is the amount of money that one takes home. Okay, or is the amount of money that one receives after having paid all the deductions, after having paid all total deductions. But now in this context, it's the context of VUS, so it means you now need to remember to include in your response, to include the word VUS, because that's the context that is given. Okay, right. I hope I've clarified that. Then the next one is calculate VUS's commission for the month of. So what are we calculating? I always encourage my learners to bring a highlighter with them. So when they are in the exam now, they will highlight words like commission. Okay, so that they don't forget it's commission for the month. Okay, it's commission for the month. And then what has he done if he accompanied 83 guests? Okay, so these are the key things that we are going to be using when you are answering your question. So what we are going to do now is it's question 1.2. Okay, question 1.2 there. So what it means now is we are supposed to calculate the value for A. Okay, so it means A, the A, we want to know how much is a VUS going to earn as his commission if he escorts 83 guests in the month and he is receiving a commission of 115 per each visitor he accompanies. Okay, so what it means now is it's going to be 83 guests that he is accompanying, 83 guests that he is accompanying, okay, multiplied by 115, because for each one of those guests he is going to be receiving 115 rands. Okay, for each one of them he is going to be getting 115 rands. So if you do that now, it would now mean that VUS is going to, let me just go to my calculator here, it means VUS is going to earn 9,545 as commission. Wow, VUS is earning a lot of money there. VUS is earning a commission of 9,545 rands as his commission. Okay, right now, so it means the value for A here becomes 9,000. Okay, I can just write it here, 9,540. Okay, so that's the amount of money that Vusi is going to earn as commission. Okay, so what is he going to do? He is going to earn 7,500 as his basic salary, and then he is also going to receive 9,545 as his commission. And then it now means that when we go to our gross income, we are going to add this 9,545 plus the 7,500. Okay, now this is probably to answer question 1.3, which says calculate Vusi's gross income for the month of January. In other words, we are calculating the value B. This is the gross income that we want to calculate, this one. So this amount here, we get it after we have added, we get it after adding. So it means that's question 1.3. Okay, and we are calculating the value for B there. It means our B is going to be, okay, basic salary, which in this case is we are saying basic I'm just going to write the formula there. Basic plus, in this given context, it's basic plus commission. Okay, basic plus commission. Okay, that's what is going to give us our value for B, which in this case now is going to be 7,500. Remember, learners, it's very important that you write these formulas in the exam. Never answer a question without giving a formula. Give a formula, because there are some marks that are going to be awarded for the formulas that you would have given. And if a learner does not give those formulas, it means that the learner does not get that amount of those marks. You will not get them. So you need now to remember that in every situation, give the formula where possible. Give the formula first, okay, and then substitute into the formula, and then give us the correct answer. Our subject is very simple. You just need to give the formula, substitute into the formula, and then give us the answer. Then you are done. You get your marks. Okay, very simple. Okay, so you don't have to complicate your life by not giving the formulas, because if you leave out the formulas, it means you are going to be losing maybe 1 mark per each answer response that you did not get, and by the time you get to the end of the exam, it becomes very difficult for you to get that distinction that you so much want. Okay, so how do we get it? Give the formula, and then when you have given the formula, you get your mark there, and then you substitute into the formula, and then you solve the problem, and then you give us our answer. And then the moment you do that, you are going to be getting your marks, and then it becomes very easy for you to get a distinction. So one would wonder, how are others getting distinctions? They give formulas, and that's where the marks come from. And if you don't give the formula, you miss out on that mark. Okay, so it's very important. Okay, so if you then add this 7,500 and this 9,545, you are going to find that your answer becomes 17,000 according to my calculator here. 17,045. Okay, 17,045. So this one becomes your answer. That becomes the value for B. So it means here the value after we have added this and this is going to be 17,045. and 40 5, like that. Okay, well done. So once you have done that, then it means we now have the values, and then we go to the next part now, which is calculate Vusi's monthly pension. So like what I always advise my learners is they take out their highlighter and then they are looking for monthly pension contribution. Okay, if the contribution, if he contributed 7.5% of his basic salary, right? So those are the key things that we are going to be using to solve this problem. So what we now know is we are supposed to calculate the monthly pension contribution. Now that's the value for C. So we are going to go to question 1.4. Question 1.4, and we are saying the value for C is equal to, our value for C is going to be equal to 7.5% of we are told 7.5% of his monthly basic salary. So it means his monthly basic salary is this one here. This is basic salary. So it's 7.5% of 7,500. Okay, that's his monthly basic salary, because here he's contributing 7.5% of his monthly basic salary. So it means it's 7.5 of this basic salary here. Okay, so it means now let's just use that figure of 7,500. Okay, 7,500. 7,500. Okay, if you do that, then you are going to get your answer. Your answer is going to be 562, and this one is in rands. That's 562 50. Okay, so this is the amount that is the value for C. So it means it's 500 here. I'll just come and fill it in. 562 comma 50, like that. Okay, 562.50 cents. Okay, that's the value for C. And then the next question that we have, it says calculate the total deductions of for the month of January. Calculate the total deductions for the month of January. In other words, we are saying we are calculating these total deductions, and it means we need the value for D. So it means that's question 1.5. We now want the value for D. Okay, we now want the value for D. Now it means our D, the total deductions. Remember, we say total deductions, it means we are adding up everything. When you say total, it means we are adding up all these figures here, including our pension fund contribution. So we are adding up all these figures here. That's how we are going to get this answer for D. So what are we going to do? Let's just do that. We are going to say 2,000 was its total deductions, 2,497 38 38. okay, plus 980, okay, plus our next value with that we calculated this one, 562.50, okay, plus the UIF contribution, which is 170, comma 4 5. Okay, now if you do all that and you go, let me go to my calculator, let me see what's the total here. If you add all those figures, your answer that you are going to get is going to be, in rand terms, it's going to be 4,210, 33. Okay, so this one is the value for D, our total deductions. It's going to be 4,210, comma 33. Okay, that's our value for D. Okay, now normally these total deductions are then subtracted from your gross earnings for you to get your net salary. Okay. Now let's just move on to the next question, and then fortunately the question says show how Vusi's net salary was determined. And again, I'm going to take out my highlighter. I'm going to look at how Vusi's net salary was determined. Okay, in other words, that's what I'm supposed to do. I need to show how. Okay, how, okay, Vusi's net salary was determined. Okay, so what it means now is I'm going to go to question 1.6. okay, question 1.6. then it now shows that our net salary, remember learners, we said our net salary, salary, I'm just going to use shorts here, but we are supposed to write in full during the exam. Net salary is equal to, okay, we are saying gross income minus your total the deductions. Okay, I'm just going to use some shorthand here to save time. Okay, total deductions. Okay, right, so what are we saying now? We are saying we are going to say 17,045 minus total deductions. They are these ones, we calculated them here even above in 1.5, so we are going to use take that figure of 4,210, 3, and then once you do that, it now means that your final answer that you are going to get, if you go to your calculator, let me just go to my calculator here, my calculator. Okay, the amount that I'm getting is 12,834 67. Okay, this amount is in rands. Right, so what are we saying now? We are saying this is how this amount was calculated. If you can now see, that this amount here of 12,834.67 cents is what we got here. So this is how it was calculated. So we would have shown how this net salary was calculated. Okay, so that's the answer to that question 1.6. Then the next one, determine the percentage of basic salary that is deducted as payee. So like as usual, we are going to determine what a percentage of basic salary, percentage of basic salary, okay, that is deducted as payee. Okay, right, so it means we need to calculate the amount that is going to be deducted as payee as a percentage of the basic salary. Okay, now already here in this case the payee has already been calculated for us. Okay, but we don't know what percentage was used to deduct that, so we now need to calculate what percentage was used to calculate this. Okay, so how do we do it? Question 1.7, very simple, very simple. Okay, we are going to say this is the amount that was paid as payee, so it means it's 22,497, okay, comma 38 divided by, okay, what is the basic salary? Because it's percentage of, we are taking payee. Okay, we are taking payee here. This is the payee we are taking, and the amount that we took is this one, and then now we are going to express it as a percentage of basic salary, which means this is the basic salary. This is what is written, basic salary. So this is the amount that we are taking, 7,500. So what it means now is we are dividing that by 7,500. Okay, and then because we want it as a percentage, you always have to multiply it by 100. You always have to multiply it by 100 because we want it as a percentage. The question here says percentage, so we want it as a percentage, so it must always be multiplied by 100. Okay, because we want it as a percentage. Okay, and then it means in the exam where you multiplied by 100, you already get a mark there. Okay, so it must be multiplied by 100 because our answer should be as a percentage. Okay, and that 100 must be written, it must be there. Okay, then in this case it now means that if you do that, let me just go to my calculator here and then see what the percentage is. We are saying 2,497 times 0.38 divided by 7,500 times 100. It means your answer there that you are getting should be a 33,3%. Okay, so that's the percentage of the basic salary that is going to be deducted as payee. So it means it's 33.3%. Okay, so when you have done that, then it means you have completed. And I want to believe that out of the 7 questions that we did there, I want to believe that you got everything correct. Well done. Okay, because this one, it was a fairly easy question, and I want to believe that you managed to get it right. Okay, right. Let me share with you the next screen. So this one was on pay slips. Now let me just share with you the next screen, and then it's yet another question on bank statement this time around. Now this one is a bank statement for Lulu, who is a client at Absa Bank, and this one is a monthly bank statement for the month of May, and we also have those things. Now what we need to understand from the bank statement, dear learners, is in our bank statement we have this column here that is written the credit. Now this column that is written the credit, it is a column that shows the amount of money that we have added in our account. In other words, this one, it shows the amount of money that was added into our account. In other words, it's more money that we have received in our account. Okay, so it's written under the credit column of our bank statement because it's more money that is being added to our account. Okay, and then you also find that the amount of money that is being removed from our account, in other words, this is money that is leaving our bank account. The debit, it's money that is being subtracted from our bank account. So when you go to the ATM and you deposit money into your bank account, that amount of money that you have deposited is going to be written on the credit side of your bank statement. And then when you go to the ATM to withdraw some amount of money, that amount of money that you have taken out of your bank account is going to be recorded on the debit side. Okay, so our debit column here, according to the bank statement, remember it's subtracting its money that is coming out of the bank account, and our credit column here is the amount of money that is coming into the bank account. This is money that is going into the bank account. Okay, so it's money that is being added. Okay, so when money is going in, we add it. We are writing it under credit, and money that is leaving is going to be written on the debit. And then why is it important to know this? It is important because it's going to affect the balance that you have in your bank account. In other words, for example, at first we had 11,380, and then there was this amount of money that was on the fourth, a cash deposit, and you can see that cash deposit is being written on the credit side. Now why? Because it's a deposit. We are adding more money into the bank account, so that amount of money is supposed to be added. And when this 1,900 was added to our 11,380, that's how they got this 13,280. You understand? You can follow through all these transactions and you'll find that this is how they got the next value. And it's important for learners to practice this so that you can be able to know how they arrived at that particular bank balance that you now have. Otherwise, you are not going to understand how much you have in your bank account. So you must be able to calculate this so that you can understand how much is in your bank account. Okay, right. Now we also have this one, which is the balances. Now we have two balances that we have opening balance, which is balance at the start of the period, and then we have closing balance, which are those balances at the end of the period. Okay, so I'm just going to allow you some time to go through this question, and then I'll be with you shortly so that we can revise. So once you are done with the question, I will ask you just to click the play button. Then you can then check on the answers that I'm going to be giving you, so and match them against what you already have. Okay, all the best. Your time starts now. Okay, welcome back. So I want to believe that you managed to answer the question. And anyway, how did you find the question? I think it was relatively easy and interesting, isn't it? Okay, so let's go through it together. Now it says determine the opening balance in the account. Okay, here, like I always encourage my learners, I'm saying determine the opening balance. So what do we want here? We want the opening balance. So what are we going to do? We are going to look at we said opening balance is the balance at the beginning of the period. Is that correct? At the start of the period. And this pay slip here was on in May 2022. So it means the opening balance is the one that is on the 1st of May, at the beginning of the month of May. Okay, that's the opening balance. So it means our balance here is going to be 11,380. So if you wrote 11,380, that's your 2 marks for you there. Okay, well done. 11,380 is the balance, is the opening balance. Okay, right. Then the next one, 2.2. Calculate the total amount that Lulu has paid for bank fees for the month. Calculate the total amount that Lulu has paid for bank fees for the month. For the bank fees for the month. The total amount that Lulu has paid for bank fees for the month. So what it means now is here we are talking about bank fees. Okay, and then we are looking for total amount. So we said when we say total, it means we are adding up everything. Okay, so what are we adding up? It means the banking fees. Where do we find them? We find them on the debit side. Why? Because these are the monies that are leaving our account. Okay, so when the bank charges us some fees, they take out that money from our account. Correct? So it means our banking fees, they should be appearing under the subtractions, because these are monies that are leaving our account on the debit side. So I'm not going to waste time and look for banking fees here. I'm going to look for banking fees in the debit column and then calculate those things. So how am I going to do it? It would now mean that we have this amount here of 14,000. They are saying this is cash handling fee. So this 14 rands and 50 is a fee that was charged. And then we also have this amount here of the transaction fees. These ones here, it's also another fee that we need to include there. Then we are also told bank interest. Now this bank interest, it shows that this is a penalty that is charged for borrowing. It means we went and we took some amount of money from the bank, and that amount of money that we had taken from the bank has charged us a penalty for that. Okay, and then we also have service fees. Okay, service fees. Okay, so these are the things that we are going to be looking at. So those are the 4 things that we are going to add up, which make us our total. So we are saying that's question 2.2. Okay, 2.2. Then it means we are saying it's 14 total. The question wants us for the total fees. Is equal to, we said it's 14 rand 50 plus 25 rand plus, you said 58 rands $75 plus we said 30 rands $85. Okay, so if you add all this, you would now get your answer on your calculator there. That plus that plus that, your answer is going to be in rand terms. You are going to get 128 80. Your answer becomes 128 rands 80. Now remember, learners, when you talk about fees, in other words, let me just explain what banking fees are for some people that that might be struggling to understand why are we picking that and not that. Okay, now banking fees is a fee that is charged by the bank to the account holder for a service that the bank would have rendered. For example, if you go and you deposit money in the banking hall, there's what is called a cash handling fee that is charged by the bank, because they are going to accept a bulk deposit from you, and they charge you for that, for walking into the banking hall. Now, this is what we are saying. It's a banking fee, because they are charging you for a service that they have rendered to you. And then you also have things like transaction fees. Sometimes when you pay using your card, or sometimes you do certain transactions using your card, online banking, nomad, they do charge you for that. And those fees that are charged, maybe you bought airtime, they charge you maybe R1, or they charge you whatever amount of money. Now, those fees that they are charging, they are fees that they are charging because they have rendered a service to you. You understand? So those, they form part of what you call banking fees. They form part of the bank fees, okay? Because these are the fees that are charged for a service that has been rendered to you by the bank. Okay, so you only need to go through and identify all these fees that have been charged to you for a service that was rendered to you by the bank. So we cannot include things like interest in this case, because the interest that is charged to us is not for a service that was rendered, okay, but it was for money that we had borrowed. So in this case, you needed only to look at the fees that were charged for a service that had been rendered to us. Okay, so those are the things that you needed to understand there. Okay, then we go to the next one, which is show how the amount of 4,560, the closing balance after the deposit on the 31st of May in her account was calculated. So there was a deposit that, okay, that's the 31st of May, and there was a deposit here, which was deposit salary of 5,312, which was deposited. And then now this person ended up with 4,005. Hey, what a terrible position. Now, you don't really want to find yourself in that situation where probably you went to a bank and you overdrew your account, and then after overdrawing your account, then you realize that the salary goes in, and still you were expecting that in this case the salary that went in is a 5,312. Okay, according to your pay slip. Okay, maybe it's 5,312 that has gone in, and then you go to the bank hoping to withdraw at least a 5,000 rands, and then it says insufficient credit. Why is that so? It is because this amount, if you check this amount of 1,307 here, it is written DR. Now, what does this DR means? What this DR means, it means that this account had been overdrawn. In other words, this person here overdrew their account. Where did they overdraw their account? Remember here, they had an amount which was 300 rands. Let me just pick my pointer here. This one was a 300 rands. This was the last time he had a credit balance, 300 rands. And then how much did this person this person then wrote a check, okay, this check here of 450, but he had 300 rands in the account. They wrote a check of 450. This check here, it resulted in this account to be overdrawn. Okay, it resulted in this account to be overdrawn. It's now overdrawn to 142.70. And then from there, this person then went into the debit side. It's now overdrawn now the account. Okay, so up to where we are now, up to this 1,307. Okay, then the salary of 5,312 then went in. And then because there was an amount that was owing in the account, the bank started by taking their money, 1,300. Okay, and then now this person here was then left with the 405. Okay, so let's show that how this was calculated. Okay, so that's question 2.3. Okay, question 2.3, it would now mean that the balance is equal to, now this person here had a 5,000 that was deposited into the account, 5,312, and 60 cents that was deposited. But now it was added to an account that was on the negative. Okay, why are we saying the account was on the negative? Because it had a DR here. The DR, it means it's a debit balance, which means in your account there is no money, so it means it's a DR. So it was this 5,312.60 cents was added to an account that had a negative. Okay, that had a negative, so I'm just going to write my negative value in brackets there, 1307. Okay, right? Now if we have a negative value and a positive value, the negative value takes precedence, remains, becomes superior, isn't it? Right, so in this case it would now mean that it's 5,312.60 minus 1,307. Okay, and then in this case now it means your answer there is going to be a 4,005, if I'm 560. These are rands. Right, so this is the balance that is now appearing in the account, which is this one that we have here, the 4,005.60. Okay, where did it come from? This is what had happened. This account here, we had a debit balance of 1,307. It had a debit balance. So when this amount of money came, it was supposed to add to what is already there, but because it's adding to a negative balance, it means it subtracts. Okay, and then we ended up with the 4,005 rands 60 cents. Okay, so that's how it was calculated. Okay, so I hope it's very clear there. And then the next one is explain the difference between a wage and a salary. So in this case now we need the difference between a wage and a salary. So what it means now is we are supposed to explain the difference. Now what you need to understand is a wage is a payment one receives on a weekly basis. Okay, a wage is a payment that one receives on a weekly basis, okay, for work that they would have done. Okay, whilst a salary is a payment that one receives on a monthly basis for work that they would have done. So a payment, a wage is a payment that one receives on a weekly basis for work that was done, whilst a salary is a payment that is received on a monthly basis for work that was done. Okay, so you need to understand the difference between those two things. Okay, so if you indicated that a wage is a weekly whilst a salary is a monthly, then for work done by an individual, then we'll still accept that as correct, because a wage is weekly whilst a salary is monthly. Okay, right, thank you. Right, so let's move to the next one, which is 2.5. okay, 2.5. okay, right. Now our 2.5 there, it reads, on 4 May, Lulu made a cash deposit of 1,900 into her bank account. Okay, let's identify that it's this one here. This is the 1,900 that this question is talking about. This one, it was made on the 4th of May. This is the 1,900 that the question is talking about. So it says Lulu made a cash deposit of 1,900 into her account. Calculate the percentage of this amount charged by the bank as a cash handling fee. So we are saying you deposit 1,900, but then there's a cash handling fee here of 14 rands 50 that was charged by the bank, and then the question wants us to calculate what percentage is this 14 rand 50 to the 1,900. Are we together there? What percentage is that? Because we deposited 1,900, but we were charged a cash handling fee of 14 rands 50. So what percentage did the bank use to arrive at this 14 rand 50? So this is what we are saying now. What we now need to understand is we are going to say our 14 rand 50 divided by our 1,900 that we had deposited. That's the amount of money that we had deposited. And because here they want the question here says percentage. Okay, yeah, the question wants the percentage, so it means we said we are going to multiply it by 100 because the question wants the percentage. So if you have done that, then it means your percentage that you are going to get, let me go to my calculator. Right, okay, your answer that you are going to get there is a 0.76%. Okay, that's the answer that you are going to get. So when you have done this now, it means that's the percentage that was charged as cash handling fee by the bank to us when we deposited that 1,900 rands. Okay, so always remember, learners, that because the question wanted you to express your answer in percentage, this percentage sign must be indicated. It must be included because the question, the demands of the question, they want you to give your answer as a percentage. So this percentage sign needs to be written, needs to be included in your answer. Okay, so it's very, very important that you remember that. And also remember that even in the exams, when you are writing these monetary values, you should always remember to include the word rands if it is rand, if it is money, or if it is measurements, then you should always remember to include the standard of measurement that you would have used. Don't just write figures and not include the standards of measurements. That is very, very important. Okay, right. Now I'm going to give you the next slide. I'm going to share with you the next slide, and in the next slide I will then need you to go through it again. And this one now is on income tax, and you have always done, you pause the video, you go through the question alone, and then you write down the answers, then you click play, then we will revise the question together. Okay, so there we go. I'm going to share with you the screen. That's the screen now. So you now need to go through this question on pay slips. Okay, but I'm just going to make an errata to this so that I can understand what I want here. I will also need to add the value of our rebates. Maybe let me assume that the rebates, they are going to be, let's assume that the rebates, I'll just add a rebate there. Rebate for him, maybe the rebate is going to be 15,714. Right, so that's our rebate. So I'm going to ask you to answer this question, and then we'll be back again shortly. All the best in your studies. Okay, I hope you managed to handle it, and this time around, this one now is on income tax, which we said our payee. Is that correct? All right, so you will find that this one is our tax table for the year 2021-2022 tax year, and then you will see that there are those figures that we can see there, and then these are the brackets, the taxable income, and then the tax brackets, and then all those other things. Okay. For example, if someone is earning 2 rands, then it means they fall in the first bracket, so they are going to get 18% of the taxable income. Okay, and then if someone earns maybe 300,000, then they fall in the second bracket, and so they are going to be taxed at this rate here. Okay, right, and then it continues like that. Now we also have this section where we are looking at the medical tax credits, and then we have the main member is getting a tax credit of 310, the first dependent 310, the second dependent 209, and the third dependent 209. Okay, so let's go to the questions then. Mr. Modise, a 35-year-old resident, in other words, Mr. Modise, like what I always encourage learners to do, you highlight a 35-year-old resident, because we are going to be using this quite a lot. Okay, at Riverside, and a monthly taxable income of, this one is a monthly taxable income of, then that's the monthly taxable income that he earns. Okay, and then hold on a second. Now, what do we now know about taxable incomes? We said taxable income is total gross income minus non-taxable deductions. So it means this amount that Mr. Modise is earning, this amount that Mr. Modise is earning, this one, it's an amount after the non-taxable deductions have already been subtracted. So this amount here is after the deductions of the non-taxable deductions. Okay, right, so this is the non-taxable, this is the taxable income. Now, why are we saying it's after deductions? Because here the question says it's taxable income. Okay, so we don't have to worry about the pensions and everything, because these things have already been subtracted. The pension, the UIF, the retirement annuities, and the donations, those things, they've already been subtracted. Okay, so we don't have to worry about that. Okay, it's easy for us now, isn't it? Right, and then we are told that during this time, Mr. Modise was a member of a medical fund for himself, his wife, and 2 children. Okay, and then use the tax tables for 2021-2022 tax year for the information above to help you answer the questions that follow. And then we are told 1.1, determine Mr. Modise's annual taxable income. Determine Mr. Modise's annual taxable income. So Mr. Modise's annual taxable income here, it would now mean that this one is a monthly taxable income. So we want to calculate the annual taxable income. So let me just highlight what we want here. We want annual. We want the annual taxable income. That's what you want, annual. So when you say annual, you do now remember that annual, it means year. Okay, so it means this is monthly. Every month the taxable income is 35,000, but for the whole year now, it means we need to multiply this by 12 so that we get the whole year one. Okay, so what are we going to do? We are going to say 3, that's question 1.1. okay, it's going to be annual taxable income. Is going to be calculated as we said. It's the monthly, which is 35 357 times 12. Okay, this one is a 7, right, times 12. So it means in this case, it means your annual taxable income that you get if you go to your calculators, I'm getting 4 2 4 2 8 284. Okay, so this one becomes my annual taxable income. Okay, so it means this is the amount of money that this person is supposed to be is earning, which is supposed to be charged tax. Okay, this is the amount of money that this person is earning, which is supposed to be charged tax yearly. Now you would also now need to recall that this tax table that we have here, it's for the whole year. It's a yearly tax table. Okay, it's a yearly tax table. But if you look at your medical credits, they are monthly. Okay, these are monthly medical credits. These are yearly tax tables. You understand? So what you now need to understand is you need to be very careful now when you are dealing with this. Make sure that everything is the same. The easier way that I always encourage learners is you now need to make sure that these monthly credits are converted to yearly, and then this one was monthly salary, we have converted it to yearly salary. Correct? Right. So it's very, very important that you synchronize those two things. Okay. Then the next one, so it's your 2 marks. 1 mark is for multiplying by 12, and then 1 mark is for giving us the correct answer. And then the next one is now it's question 2. Okay. The next one is question 1.2. It says 1.2 there. Okay, right. Question 1.2, it shares show with calculations that Mr. Malinga will receive 13,344 medical tax credits for 2021-2022. Will receive 13,344 medical tax credits for 2021-2022 tax year. Now when we talk about these tax credits, okay, these tax credits, it's the amount of reprieve or relief that is going to be given to a taxpayer for contributing, for being a member of a medical aid. Okay, for being a member of a medical aid. So what it does is it is supposed to be reduced. It reduces just like a rebate. It also reduces on your tax liability. In other words, it reduces depends on the amount that you are supposed to be paying as taxes, okay, because you are contributing towards medical aid scheme or fund, then it means you are supposed to get relief from the amount of tax liability that you have, okay. So in this case now we are saying how much then is he going to get in the year, okay. We want to prove that he is going to receive 13,000. This is what we want to prove. We want to prove that he is going to receive 13,344, okay, right. So what are we going to do? Let's go and look at this. Mr. Modise, we are told he's 35 years, and during the year, okay, Mr. Modise was a member of a medical aid for himself, so it's himself, okay, his wife, two, and the two children, so there are 4 of them. So what it means now is on 1.2, it would now mean that we are going to say total credits. Okay, then it means we have 310 for him. Let me just correct that there. All right, we have 310 for him, okay, plus he has his wife, so his wife also has a credit of 310 because he becomes the first dependent, isn't it? Right. And then the next one is the first child has credits of 209, and then the other second child also has credits of 209, okay, because here we are told that it's himself, his wife, and the 2 kids. So it means it's himself, his wife, and the 2 children. So it's himself 310, which is the main member, and then his wife becomes the first dependent, and then second dependent is the first child, and then the third dependent is the second child. So that's why we are adding it like that. Then if you do that, you are going to find that your answer that you get is going to be let's just see. His answer here is going to be 620 plus this one is a 418, okay, 620, and that one is a 418. And then when you have done that, it means your final answer there is going to be 1038 1138, okay, 1138. These are the monthly credits, okay. And then now for us to get the annual, because the question here wanted us to get the annual, okay, so it means now we are going to multiply this monthly by 12, okay. And if you multiply that monthly by 12, then you are going to, let me go back to my calculator. Right, so it means now if you multiply that by 12, your answer that I'm getting is 13,000 in rand amounts. The answer that I'm getting is 13,656. Okay, right. Now if you check, it would now imagine that this question, there could be something wrong here. This question here, it is a mistake here. Okay, so probably there was an errata that I didn't get, but there is a mistake on this question, because this amount, we are proving that his medical credits, they are 13,656 and not 13,344 as is purported by the question. So in this case, remember, what do? We are saying main member is 310, the first dependent is 310, and then the second dependent is a 209, and then the third dependent is a 209. So if you add that, you get your monthly tax credits, and then you have got to multiply that by 12. And if you multiply that by 12, your answer that you are going to get is 13,656. So that's just some correction there. So please note, learners, if you got 13,656, then it means you were on the right track. You need to clap hands for yourself. Well done. Okay, right, so that's our tax credits there. Then we go to the next part of the question. Calculate the amount Mr. Malinga must pay for 2021-2022 tax year. In other words, how much is he supposed to pay for the 2021-2022 tax year? So what do we do now? We now need to understand that the amount of money that Mr. Malinga must pay is going to be determined by the tax bracket that he qualifies for. So in this case, we have noted that Mr. Malinga is earning 424,284, okay, rands. Okay, this is the amount, this is the annual amount that he's going to earn. So he qualifies in which bracket? The first bracket? No, because the first bracket is for those that are earning 1 rand to 216 rands 200. Those are the ones that fit in the first bracket. So the first bracket, not the correct one. The second one, it fits those that are earning 216 201 up to 337 2800. Okay, 337,800. Okay, so these ones are the ones that are in the second bracket, but Mr. Malinga is earning 400,000, so it means he's not in that second one, and then 400,000, it is in that third bracket, in this bracket here. So the formula for calculating taxable tax payable is this one that is given here. That's the formula that we are going to use. So what are we going to use? Let me just pick my pen there. We are going to use this formula here. That's the one that we are going to use. Okay, right. Now let's calculate now. So we are saying annual tax. So we are saying annual tax. Okay, annual tax is going to be equal to the formula that we have. It's 70 532 plus, I'm going to open a bigger bracket there, 31% of taxable income above above 800. close that bracket. So it's very important in the exam that you start by giving the formula, because the moment you give the correct formula, then there's a mark that you already have there. Okay, for giving the formula, there's already a mark that you have there. So give the formula first before you start doing anything else. Then the next one now, it's going to be 70 5 3 2 plus open bracket 31, because it's 31%, so it's 31 over 100 of the taxable income, which in this case our taxable income is 284 minus, because here we are calculating the amount that is above. Okay, so minus 337,800. Then you close that bracket. So you close also the bigger bracket. So what we want here, what are we doing on this part? This part here, what we are trying to calculate here is we are calculating the amount, the taxable income that is above 337,800. So if this person is earning 284, then it means the amount that is above 337,800 is what we are trying to calculate here, because it's 31% of that amount that is above. Okay, not the whole amount, not 424, but the amount, only the amount that is above is what is going to be charged the 31%, only for the amount that is above. Okay, right. So in this case now, it would now mean that we are going to say it's equal to 70 5 3 2 plus open 31% of the amount that is above. In this case, we are saying the amount that is above is 484 484, and then if you say we solve that one, then it would mean that your answer is going to be a 70 5 3 2 plus, then 31% of that is going to be a 26,810,04. Okay, and then if you do that, it means your final answer is going to be 9,7,3,4,2,0,4 rands. Okay, right, that becomes. Now the question here is asking us to calculate the amount of tax Mr. Malinga must pay for 2021-2022 tax year. So what does that mean now? It means this is the amount of tax that is payable, but this is not the amount of tax that he must pay. Okay, this is what is payable, but this is not what he must pay. Okay, so in other words, the tax due, for us to be able to calculate the tax that is payable, we now need to subtract on this amount of money. We now need to subtract things like the medical credits. We now need to subtract things like the rebates. Okay, so in this case now, it means now the medical credits, we now need to subtract these medical credits there, and we also need to subtract this rebate that I have added here, just to try and modify the question so that you know how it's applied in the exam. So in the exam now, it now means that according to this question, they are saying must pay. So it means this is the amount of tax that is supposed to be paid. Okay, so in this case now, it now means that we have the 97342.04. Then we are going to say minus, then we are going to subtract our rebate there of 15, our modified rebate there of 15, 714. Okay, 15714. Then we are also going to subtract our medical credits. We calculated it there, and we said it's 13 6 5 6. Okay, 13656. So if you do that, your answer that you are going to get, let me just check on my calculator here. Okay, the answer that you get is, you are going to get, as in rand amounts, in rand terms, you are going to get a 6 7 9 7 and a 2. So that's the amount of money that is that he is supposed to pay. Okay, that he must pay. So this is the amount of money that he must pay. Okay, so remember, what do? You calculate the tax payable, and then when you calculate the tax payable, you must remember to subtract the medical credits, the annual medical credits, and then you also subtract the annual rebates. Okay, so those are supposed to be done. If the person has the medical credits, then remember the medical credits, you also need to take note of how many people are beneficiaries of those medical credits. Sometimes maybe the person might be just be himself and the wife, and they don't have any kids. Then it would mean that we are just going to have main member and first dependent. Okay, and then you calculate that this is monthly, so you need to convert that to annual. Okay, I hope it's very clear there. All right, so let me just share with you the next slide, and then you will continue with this issue on the medical credits. Okay, and as well as the rebates. Now you can see that Josie is 55-year-old and earned a gross income of 39,489 per month during 2021-2022 tax year. A non-taxable monthly deduction of 7.5% was made from her salary and paid into her pension fund. So remember, we said pension fund is non-taxable. In other words, it has got to be subtracted before we calculate the value that is supposed to be paid as tax. Okay, so it's a non-taxable monthly deduction of 7.5%, which is the salary, which is supposed to be paid towards the pension fund. And then you are supposed to use the tax rate tables and the information above to answer the questions that follow, and then explain the term gross income. And then you also need to show any calculations that a person who is 75 years and older and is earning 115,100 during the 2022 during the 2022 tax year, paid no tax. And then you also need to calculate Josie's annual tax payable. Okay, now you would now recall that this 151,000, it is going to fall in the first bracket. If you can't remember the text table, just rewind a little bit and go to the text table and then just check. So this amount is going to fall in the first text bracket. Okay, so how are we going to calculate it? Remember, in the text bracket we said it's going to be 18% of the taxable income. So in this case it's 18% of the 151,100. Okay, so let's just go to the questions. So I'll pause the video and then you can attempt the questions, and then we'll come back again and then we'll do the activity together. All the best. Right, so what it means now is, okay, let's just start by looking at the first question here. We are told that explain the term gross income in this context. So like what we looked at previously, remember we identified that when the question says in the context, it means you need to give your answer based on what has been given. Okay, so in this case, the question is asking about the term gross income. Okay, so what is gross income? Now, gross income is the amount of his salary. Josie, in this case, is the amount of his salary or income before deductions are made. So when we talk about gross income, remember we are saying this is the amount of money or the amount of his salary before the deductions are made. Okay, so someone could have said, is Josie's in salary before paying for any deductions or before any deductions. Okay, so that becomes your gross salary. Okay, in this given context. Then the next question is, show by calculation that the person who was 75 years and older and earned 151,100 during the 2022 tax year did not pay any tax. In other words, there was no tax that you were going to pay. Okay, if you are 75 years old. So what you were supposed to do now, remember from our text table, you would recall that your text table, in other words, let me just write here that it's question 2.2. okay, you'd recall that the text table, it indicated that in other words, the tax that is supposed to be paid by this person according to the tax payable, it would mean that this 151,100 was falling in the first bracket. Okay, it was in the first bracket, so it was going to be charged at 18%. According to our tax table, it was going to be 18% of the taxable amount. In this case, the taxable amount is our 151. Okay, 151 100. Okay, 100, like that. Okay, if you do this, then it would mean that your amount that is supposed to be paid as tax is going to be in rand terms. In rand terms, it's going to be 27,198. Okay, according to my calculator there, that's 27,198 is what is supposed to be paid. Okay, now if this person is 75 years, okay, if this person is 75 years, because the question says who was 75 years and older. So if this person is 75 years or older, it means the person is going to fall in this rebate category. This one, 75 years and older, it means the person is going to fall in this rebate category. Okay, it's going to fall in this rebate category, this one here. Okay, now what that means is, it means in this case, it means the person is going to get the primary plus the secondary plus the tertiary, because the person is in the tertiary, but 75 years is here, okay, and older. So it means the person is going to be a beneficiary of all these rebates here, primary, secondary, and tertiary. So what it means now is we are going to say the rebates, in other words, the tax relief that is going to get if he's 75 years and older. So it means the rebate, okay, is going to be equal to, we said the primary, which is 15 7 1 4, okay, plus the secondary, which is 8 6 1 3, okay, plus the tertiary, which is 2 8 7 1. So if you add all this up, you are going to find that your answer that you get on my calculator is going to be 27 1 9 8. Okay, so this is the amount that you will get as a rebate. Okay, so the tax payable is 27,198, and the rebate that the person is going to get is 27,198. That would now mean that the actual tax that the person is going to pay, the actual tax that the person is going to pay in this case is was supposed to pay, the tax payable is 27,198, and the rebate that is going to get is 27,198. So it means the answer that we get there as the actual tax and rent amounts is 0. So it means this person here is not going to pay anything. Okay, so this person here is not going to pay anything in tax. So that's what we have shown there. Okay, now the next question that we had was calculate Josie's annual tax payable. Calculate Josie's annual tax payable. So what you now need to do is, in that's question 2.3. So what it means now is, remember we said Josie is earning Josie, where is the monthly income? Okay, the monthly income is there. So is earning and a gross income of 39,486 per month. Okay, so it means Josie, the annual, we need to start by calculating the annual income for Josie. Then we are saying the annual income for Josie there is going to be annual income. Okay, annual income for Josie is going to be the monthly, which is 39,486. Okay, multiplied by 12. Okay, then your answer that you are going to get there, you are going to get the answer is in rand amounts, you are going to get a 73 473 8 3 2. Okay, that's the annual income for Josie. This is gross. Okay, then we also have annual pension. We have pension for Josie. Pension for Josie, and if we look at the pension there, we are saying the pension is this one. It's this amount times 7.5%, because we are told that non-taxable monthly deduction of 7.5% was made from her salary and paid into her pension. So our pension is going to be 7.5% of this annual salary, which is a 4 7 3 8 3 and a 2. And if you go to your calculator and you press that, you are going to find that the pension that Josie is going to be contributing throughout the year is going to be a 35,000 in round amounts. It's going to be the 35,000. Okay, 537.40. Okay, that's the amount that is going to be paid as pension. Now the amount of taxable income, then it would now mean that the next thing that we want is we now want our taxable income. Okay, and remember we said our taxable income is your gross income minus your non-taxable deductions. Are we together there? Okay, so it would now mean that our taxable income is going to be, my gross income is going to be 4 7 3 8 3 2 minus our pension. We say it is our non-taxable deduction. You still remember? Well done. So it's the minus 3 5 3 7 comma 4 0. And if you do that on your calculator, your answer that you are going to get is a 4 3 8. Okay, 4 3 8 2 9 4 comma 6 0. Okay, this is the amount that that is supposed to be charged tax. This is the taxable income. Now from that taxable income, now you now check which bracket does it fit into. If you go through your tax bracket like the previous one that we had just a few moments ago, you will find that this amount of income is going to fit in the third bracket. Okay, it's going to fit in our third bracket, which means now we are going to say the tax that is supposed to be paid, it's going to be 7, which means now our tax bracket, now I'm applying my tax bracket. Okay, tax bracket, it qualifies for tax bracket number 3. So it means now in the tax bracket number 3, what is the formula? The formula, we said it's 70. We start by writing our formula again. 75 32, okay, times up, plus, it's plus plus 31%, 31% of income above 337. $800. So it's very important that you start by giving us the formula there, because there are marks that you are going to be getting for giving the formula. So it means now we are now substituting into the formula, right? So now we are substituting into the formula, which now means that we are going to say, which is equal to, okay, we now have 70532 plus, okay, plus open the brackets there. I'm going to put the brackets 31 over 100 of the amount in excess. So we need to calculate the amount in excess. So we are saying this person is having how much? 438 9, no, sorry, it's 29 438 4.60. So with the amount in excess of what? Of 3.733. Let me just pick up my eraser there. Right, 337 800. Close the small bracket, close the big bracket. Okay, so what it means now is you have substituted into the formula, and then that would now mean that we are going to have a 7532 plus open bracket 31% 31% of the difference that we have there, we are going to have the difference is 31% of 1, just hold, let me just go to, okay, you'll get your answer as 100 is here for the small bracket. Your solution there is 100 494. Okay, and then you close that bigger bracket, and then if you calculate 31% of that and add it to that, you just go to your calculator and you enter the figure straight. You are going to get your final answer as a 101. Okay, 101,685, okay, comma 3. Okay, that becomes your final answer. But then this amount of money is the tax that is payable. But then you now need to subtract, you now need to subtract things like your rebates, and then you also need to subtract your medical credits if we had any. So in this case, it would now mean that we are going to subtract, because this person here, we are not told anything about medical credits, so we only have rebates here. And this person is said to be how old? This person is said to be 55 years, which means is below 65, so qualifies for the for the primary rebate, which means now in this case we are just subtracting 15 7 1 4. And if you do that, it means your answer that you are going to get an amount in rands, an amount of 971.33. Okay, so this is the final answer that we had. Okay, so these were the solutions to the activity that we were looking at in these particular videos. So if you like the video, click the like button and remember to subscribe to the channel. All the best in your studies. And if you have any comments, also remember to send a message on the comment box below, and then we'll be able to answer those questions. Okay, all the best in your studies. I'm out.